Do you want to know how to outperform 92% of financial advisors and fund managers? Well, stick around in this video because I'm going to teach you how. Now, this is not financial advice, but I'm going to tell you what I'm doing that I learned from this article in the Motley Fool. The Motley Fool came out with this article in 2023, late 23, where it says if you want to outperform 92% of professional fund managers, buy this one investment and hold it forever. The investment has outperformed almost every Wall Street pro over the last 15 years, and it's quite simple. All you need to do is buy the S&P 500 indexed fund, such as VOO or VOO, which is the Vanguard S&P 500 index fund, and hold it forever. You will outperform 92% of all financial advisors and fund managers. I love how Jack Bogle and Warren Buffett put it. In a 1997 paper, Vanguard founder Jack Bogle noted a simple reality of investing in the stock market. Investors as a group must underperform the market. What? Because the cost of participation, largely operating expenses, advisory fees, and portfolio transaction costs, constitute a direct deduction from the market's return. Warren Buffett referred to the same market forces in his parable of the Gottschalks, who lost their fortune to helpers like brokers, managers, and financial advisors. He sums up the parable with a simple idea. For investors as a whole, returns decrease as motion increases. By and large, active fund managers trade a lot more than an index fund. They create a lot more motion. Did you know that, as an example, VOO, the Vanguard S&P 500 index fund, has an extremely low fee? In fact, it's so low, for every $10,000 you have invested, you pay $3 as an expense ratio, 0.03%. Now, according to NerdWallet.com, the average cumulative total fee on an account across America, like that's managed by an advisor, is 2.1%. 1 to 1.5% is going to go to the advisor for his advisor fee, and the rest is expense ratios and account fees in the different investments in which you're invested in. 2.1%, let's just call it 2, on $1 million, that's 20 grand a year. Well, what if you're retired for 30 years? That's $600,000 in fees. That is dragging down your performance, which is why if you want to outperform 92% of financial advisors, ditch the advisor, open up a self-directed account, put it in VOO or something similar like the S&P 500 index fund, and you are going to be winning the game of investments overall. Now, this is not financial advice, but this is what I'm doing, and this is what the Motley Fool says to do. Take it with a grain of salt, do your own research, find out if it's a good fit for you, but be very careful before you go out and hire a financial advisor, because frankly, often what I've seen is that people are worse off when they actually have a managed account by an advisor. They just don't perform as well as if they were just putting it in the S&P 500 and letting it ride. We'll see you on the next video.